Most business owners believe cash flow problems come from low sales. That is rarely true. In reality, cash leaks happen quietly through daily expenses that feel small, harmless, and routine. Coffee runs, rushed subscriptions, duplicate tools, unchecked card swipes, and tiny charges that never get reviewed. This video will show you how to track daily expenses the smart way so your cash stays protected. Tracking daily expenses starts with mindset, not software. First rule: every dollar leaving your business must have a reason you can explain in one sentence. Open one dedicated business checking account and stop mixing personal spending completely. Use one primary debit or credit card only for business purchases so transactions stay clean. Set a fixed daily review habit of 10 minutes at the end of each workday. Open your banking app and scan every transaction line by line. Write down each expense in simple words like fuel, lunch, meeting, packaging material, software fee, shipping, marketing, office supplies, repairs, or utilities. Do not use vague labels like miscellaneous. Create a daily expense cap. For example, decide that daily operating expenses should not cross $300 unless pre-approved. Track cash payments separately because cash disappears fastest. Keep every receipt, even small ones, under $5. Take phone photos of receipts immediately and store them in dated folders. Create a simple spreadsheet with columns for date, vendor name, expense category, payment method, and purpose. Update it daily, not weekly. Assign numbers to categories like 1 for marketing, 2 for operations, 3 for admin, 4 for logistics, 5 for utilities, 6 for food, 7 for travel, 8 for software, 9 for repairs, 10 for taxes. This speeds up tracking. Reconcile expenses every night by matching spreadsheet entries with bank transactions. If one transaction looks unfamiliar, investigate it the same day. Set alerts for every card swipe above a chosen amount like $50. Track subscriptions separately because they silently kill cash flow. Once a week, review all recurring charges and ask whether each one directly supports revenue. Track vendor-wise spending monthly to see which supplier is draining the most cash. Create a daily petty cash limit and lock the cash drawer after that limit is reached. Avoid paying vendors without invoices. Every expense must have proof. Track employee reimbursements daily, not at month end. Use mileage logs for vehicle expenses and record distance in words, not guesses. Track tax-related expenses separately so you do not spend reserved tax money. Compare daily expenses against daily sales, not monthly sales. If daily expenses exceed daily collections for more than 5 days, pause discretionary spending immediately. Track expense timing. Some expenses hurt more because they happen before customer payments arrive. Delay non-essential spending until receivables are collected. Set a daily cash balance floor like $10,000. If balance approaches this level, freeze spending. Write notes beside every expense explaining why it happened. This builds spending awareness. End each day by asking one question: did this expense help me earn tomorrow's revenue? If the answer is unclear, flag it for review. This simple daily discipline protects cash flow better than any complex accounting report. Once basic tracking is in place, daily expense control becomes a cash protection system. Start by forecasting daily spending before the day begins. Each morning, write expected expenses in words such as fuel cost, supplier payment, ad spend, delivery charges, or software renewal. At day end, compare expected versus actual spending. The gap shows where control slipped. Separate fixed daily expenses from variable ones. Fixed expenses include rent portion, internet, core software, and insurance. Variable expenses include ads, travel, meals, overtime, packaging, and repairs. Variable expenses need tighter daily control. Set spending authority rules. For example, any expense above $100 requires approval. even if you are the owner. This forces conscious decisions. Track payment method patterns. If card spending is rising faster than cash collections, slow it down. Review merchant names carefully. Sometimes the same service bills under different names, causing duplicate charges. Track discounts and refunds daily. Many businesses forget to record refunds, which creates false expense numbers. Use daily expense ratios. Divide total daily expenses by daily revenue. If the ratio crosses 60% for service businesses or 70% for product businesses, investigate immediately. Track expense frequency. Small daily expenses repeated many times cause more damage than one large planned expense. For example, $15 daily coffee equals over $5,000 yearly. Track time-based expenses. Late fees, penalties, and rush charges usually come from poor planning, not necessity. Track employee-related expenses daily per person. This shows spending behavior patterns early. Use notes to record emotional spending decisions, such as buying tools out of stress or urgency. Emotional spending often hurts cash flow most. Track supplier payment terms and mark due dates in advance. Late payments cause penalties, while early payments reduce usable cash. Track cash inflows and outflows on the same sheet so you see timing gaps clearly. If expenses go out before money comes in, cash stress increases, even if profit exists. Create a daily expense stop list. These are expenses you pause immediately when cash feels tight, such as ads, non-essential travel, upgrades, or consulting. Track inventory purchases daily and compare with actual sales movement. Buying inventory faster than selling drains cash silently. Monitor expense spikes. Any sudden jump in daily expenses must have a written reason. Track trial subscriptions carefully and cancel before renewal dates. Track currency conversion fees if you deal internationally because they add up quietly. Review bank charges daily, including transfer fees and service fees. Many owners ignore these until month end. Create a daily closing ritual. Before ending work, confirm that every expense is logged, categorized, justified, and matched to cash balance. End with one question. If tomorrow's sales stop, can today's spending still be defended? This daily discipline turns expense tracking into a habit, not a task, and protects cash flow long before financial trouble appears. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.